Okay, hello, good day, everyone. My name is George Welt. Now, every week I'm going to be dropping at least one or two assets to just to show you directions of market. Now, I will focus on trending market, and the market I've majorly focused on is GBP for now, GBP. So if we look now on the 3 months time frame, I'm currently on the 3 months time frame, we can see a market that is pushing to the upside, meaning that we are trending up and I want to follow that trend. The trend is your friend. So I want to trade in line with this trend. So I'm going to drop my time frame now. But before that, I'm just going to explain what I'm looking out for. For example, if I want to buy this market, I only just need to see a break of structure and I'll see the market take out this low. The market can decide to generate a lot of internal liquidity before it comes to take out the major high. Then I understand that the market is coming down. So if the market comes like this, it will do something like this, come like this, tap into a POI until it takes out the last liquidity. And that's where I expect the market to go up. So this place becomes my last liquidity. There must be a break of the previous low and the break. So this becomes like a market. So that this last low becomes the liquidity. And my entry time frame I'm going to be using is just the 30 minutes time frame. Let's keep this thing simple. I'm not trying to, let's not make the thing look so difficult. So I'm going to remove this stuff from my chart now. And just, since you know what I'm looking at for the 30 minutes time frame. But however, now we're going to be dropping our chart now to the weekly time frame to see if the weekly is still trending to the upside. So as we can see, the weekly is still trending. This was where we got a weekly change of character. You can see the market was just giving us, it was giving us structures coming down. This is where the thing started going up. So we can see clearly without using glasses that the market on the weekly time frame is still trending to the upside. Then I will drop down to the daily time frame now. This is how I do my top-down analysis. Now, the daily time frame, what am I really looking out for? I want to see where markets will do something like this, break of structure, it will generate liquidity, it will break out. Then I expect that this definitely after a break of structure, the first pullback is the liquidity or inducement. The market comes to take out that inducement or go. That's the first scenario I look out for. And the next scenario is that the market will do something like this to pull back, pretend as if it wants to come and take this high. It's called a failure swing. The market will come back, take out that liquidity, then begin to look for buys to target. This is liquidity, because liquidity is on every high and every low. So this is where I now begin to get my daily range. So I go back to the chart and begin to focus on the most current structure. So this is what I'm looking out for. I've seen it, right? So after the break of this high, price came, took out this low, right? That's what we're looking out for. Then we see this aggressive move with imbalance. Then what did I say? Market will pull back as if it's going to take that high, but fail to take it. That's called a failure swing model, right? Then we see this gap. This is a big gap here that is left here. So this becomes our POI. Before I trade, I always ask myself what is pushing the market. So this market is going to buy until it gets to this point. So now, don't forget that we say we are bullish, right? This was the last, this was kind of the last break of structure I had to the downside. This was the last break. Now, this is like a transaction. So anytime the market makers break a low or a high, they don't have any business moving in that direction. So we expect the market to reverse and continue to go to the upside. So this is where I now drop to the 30 minutes. Don't forget what I said I'm looking for in the 30 minutes. I'm either looking for something like this, a break of structure. Market takes out this point. You can do whatever it wants to do, generate liquidity inside, and come back, take out this flow, and go up. So don't forget, this is our daily target. So quickly, let's wrap this thing up. 30 minutes time frame. We begin to study the 30 minutes order flow. Please, this is what you are reading. Leave this guy now. Who will go and be reading this one? This is where we are focusing on now. So let's begin to read this 30 minutes order flow. Please, sorry, let me remove this box so that we don't get maybe chart looks so messy. So this was where the 30 minutes, because that's trading for you, it's called time frame alignment. This was where the 30 minutes told you that, oh, see, I'm turning bullish to fit into the big time frame. Are we together? So this is what we have, a break. Then I have another break here again. Don't forget, there's a break. Then we have this market break. This is a pullback, another break, second break. So this becomes our liquidity. We have taken out that liquidity, right? After the liquidity, we see the market do this break of structure. Are we together? So after the break of structure, this point, this pullback, this is like a pullback somewhere around this point. Yeah, that's a pullback. Then we have this breaker. This is a breaker block. That becomes your POI. That's a breaker block. Because after the break of this structure, some SMC trader will be thinking of selling from that point. So that's a breaker block. That's a POI. Then what did I say? You are looking for something like this. So we have a higher highs, higher low, higher high. So the market comes, takes out this point, and we see a breakout, right? That's what we are looking out for. So we have gotten, the market took out that low and broke out of this structure. Takes out this low, and we see that breakout. So we still have another, look at it here. Are you seeing it? It's like the confirmation entry, sweep of that low, and we see the major breakout of this point. That's a breakout. Please let me, no matter how tiny, whether it's a week, I don't care. But I still use it because it works. So that's a breakout. Then where's your inducement? Your inducement is seated inside this pool, these points. Those are more like the trap because a lot of people are seeing that level as a level of support. So we have this other block here now, our POI. So let's continue to read structure to see where we can get a continuation money. Don't forget, we'll just be reading until you see the market will just take out. So this is another opportunity again to buy the market. So we have another higher highs, higher lows, higher highs, higher lows. You read the structure and see where the market now did something that we are looking for. Boom. So this is where we got another entry. So we have market sweep this liquidity resting underneath this low. And finally, not only that, we trace the origin where the sweep came from, which is this break. Then what do I have to do? I told the last low before this low becomes the liquidity. So we extend it and put a limit order there. Wait for price to come there. So we have another continuation again on this market. As you can see, that's a clean setup. So we have the market that's taking at that low. Then we have a major swing break here. So if I'm to continue that trend, I'm expecting the market to come in here and take out that liquidity. Then obviously I will just use this as my point of interest. Then this becomes my protected low. So that's it. So that's it. That's it. Don't forget what you saw. The market is trending to the upside. So if you are thinking of selling Gbpjpy, you are just wasting your time. I can still hold the buy up to that point, then I'll just cover this low. So that's all for now, guys. Thank you so much, and God bless. See you some other time.